I became a silver bug in 1964. I was 17 years old, and I held up a dime. I said, "Why is this dime copper? Why is this thing copper all of a sudden?" And then I held up a quarter. It was copper also. Then a $50, I think, was copper also. So I'm going, "What the heck's going on?" And the greenback, instead of saying silver certificate, said Federal Reserve note. So I'm only 17 years old, but I knew something was fishy. And that kind of twigged my mind ever since then as to what is really going on. And so it became my study. And I found out about Gresham's law. Gresham's law states that when fake money comes into the system, real money goes into hiding. But it was
controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head, hopefully, towards a resolution.
The bigger point here is this, okay? I just make it simple. Gold and silver are God's money. God placed it here. And fake money is fake money, fiat money. And it's fake. That happened in 1972. And as most of us know, is what forced the issue was the government of France, Charles de Gaulle, I think, or one of those guys, sent warships to America to pick up their gold. Right. And the reason was America was printing so much money, as they still are. They're printing as much as they can. So America today, I believe, is the largest debtor nation in the world. And they're printing, I think they printed more money in the last 10 years than they did the last 30 years. And people are still saving money. There's a lot of fake silver. I mean, I don't take ETFs. I don't have golds, GLD, which is I have no paper. I've never trusted paper since Vietnam. And so GLD is a gold ETF, and SLV is a silver ETF. I never touched it. So let me just say this. Why again? If it used to be $50 an ounce for silver when the Hunt brothers were trying to corner the market. I'm that old. I've been in 64 and 71. I've been in gold. So 64 to 71. I've watched it. I've played it. I've done it. I have literally tons of gold and silver. I own gold mines and silver mines. I don't play with paper. But what is it with people's psyche? Miles Franklin, can deliver. And I talked to my friends and no, I think I'll wait for it to hit 500 an ounce silver. Why are people that stupid, Andy?
It's the same reason so few people are ever successful in investing, Robert. They wait until it's been validated by price, and I think the only way to truly succeed is to buy when the price is low. And what's most intriguing about silver is that its fundamentals couldn't be stronger. If people were to look under the hood instead of just looking at the price and realize that this is a commodity that has duality in demand, both industrial and monetary. This is a commodity that's coming out of the ground at a ratio to gold of 7 ounces of silver to 1 ounce of gold, yet is priced at 90 to 1. This is an asset that is depleting in nature because for 5,000 years, its ratio was 16 to 1 to gold. Now it's 7 to 1. In every respect, it's the most undervalued commodity and or investment.
So let me just say it, let me make it really simple, okay? Gold is hoarded. It's not really used that much.
That's right.
So most of the gold has been, I've been through the Andes in Peru, And I've seen the gold mines the Incas were driving, because I was buying a gold mine up in the Andes. This is in 96, I think. I was looking up there. I said, geez, for 1,000 years, the Incas were digging for gold. And then I went looking for a gold mine in Mongolia. There's a place called the Checkerboard. And the Mongolians were digging for gold. And the thing is, the gold that they dug up is still around. But silver is depleting because it's an industrial as well as a precious metal. So what are some of the things it's used in? What is silver used? Why is the demand for silver going up as an industrial metal?
Well, of course, in a green and digital world, anything that conducts electricity or electronic solar panels, battery-powered vehicles, iPhones, iPads, flat-screen TVs, just about anything that conducts electricity has a modicum of silver in it. And so whether you're talking a simple light switch to a motherboard that has 1/5 of an ounce of silver in it to run a computer, it all has silver in it. And to your point, because it's used in such tiny amounts, most of it isn't recycled. Even the gold that is used in industrial applications, it's so valuable, it makes sense to recycle it. And so you could argue that all of the silver that has been used in industry in the last 80 years, the majority of it is in landfills somewhere. And so it's an asset that is depleting in nature. And so it represents a very unusual situation. And really the truth of it is that you have a handful of commercial banks on the commodity exchanges that are suppressing the price. When you talk about what's happening in terms of retail demand at the same time, to me, what is really different is that you have a whole world that is awash in inflation and anxiety of war and geopolitical issues. And, as you said earlier, in the last 4 years, the US has printed more money than in the history of the country before it.
Rich dad, poor dad, what savers are losers. Why would you save money and the debt's going like this? Now inflation is going like this, and inflation leads to instability. That's my concern. And I said, why would you? So I posed, I said, silver will probably go between, I expect it to go to 100 to 500 in 5 years. And this idiot friend of mine says, I'll just wait 5 years then. I want you to prove it's going to go up. I said, but look at, as you said the word earlier, the fundamentals, as you know, it's being consumed, it's being burned up. And, Tesla, God bless them, they're burning silver. Every TV says burning silver. Green New Deal's burning silver, and it disappears. It stays out of circulation. And what my friend said, Andy, get this, I'd rather have bonds. I'm going, are you kidding me? Because, as interest rates on bonds go up, his bonds get less valuable. I just can't believe the psychology of it. So my question, there's more than this, is I've dug for gold and silver all over the world, in Argentina and everything. I sold my silver mine to Yamana, with a good profit on that one. But I don't sell silver. I sell the mine, but I won't sell the silver. And I like oil because they can't print oil. So I would say I like anything the Fed cannot print, because anything the Fed can print is fake.
But I've been seeing this event coming, where there is a realization, an awakening by the public that, my gosh, it's time to think outside the box, to start thinking in a way that your rich father taught you to think, not so much by the book, but outside the box, and think about money differently.
Why are these idiots still hanging on to bonds and stocks?
I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation, a price moves up, the event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions as they move. They don't have to move very much in. They can move. There are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe. As with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets.